What's going on, everybody? My name is Zach Hartley, and today we are going to review the quarterly financials for Drone Delivery Canada. They just released them last night, and I have spent the entire day going through them and analyzing them. So in this video, I'm going to share with you my opinion and my thoughts about how they have performed over the last quarter. Let's jump right in. Okay, so I've made several videos about this company. If you want to see a summary of the company or even the last quarter's financials compared to this quarter, definitely check out some of the other videos on my channel. But in this one, we are going to dive into the Q2 financials for 2023. This is what the balance sheet looked like, and honestly, they have always had a very healthy balance sheet. They have always had healthy assets and very low liabilities. But when you dive into this, there's a couple of trends that I'm starting to notice. Number one, there was a $2 million difference in the cash between this quarter and last quarter. So their cash balance is declining by about $2 million per quarter. They also have very low liabilities, like I said, but one of those liabilities is super important to me, and that is deferred revenue. Deferred revenue is customer deposits for services that have not yet been rendered. So let's say that you have a software and you buy a 1-year subscription to that software, but you're in month 3. Well, the other 9 months of that payment would actually be considered deferred revenue, and it gets held on the liability side of the balance sheet. And when we look at Drone Delivery's balance sheet here with deferred revenue, we can see that there's only $3,846 in that account. Last quarter, there was $47,000 in that account, and I think this number has gone all the way up to $300,000 or $400,000 at one point, and now it has trickled all the way back down to under $4,000, which to me is a concern because it means that they don't have customers that are prepaying for services, that are buying long contracts, that are basically lining up at their door and filling up their pipeline. This, in my eyes, is a bit of a red flag and a bit of a concern, especially because this number used to be much higher. Just for reference, here's what the balance sheet looked like last quarter. You can see that deferred revenue was $47.8 thousand, and the balance sheet had over almost $12.8 million in cash on the balance sheet. When we look at the income statement here, again, it was a little bit disappointing. The revenue was actually down when you compare quarter over quarter, 175 here to 199 last year. When we look at the 6-month number here, this is also a little bit skewed because they sold an aircraft. They actually sold one of their Condors in the last quarter, and then unfortunately that Condor got into an accident and basically got totaled. And so you have to kind of take that into consideration. The revenue increase here on the 6-month timeline is not caused by a ridiculous amount of new customers lining up and a crazy amount of flights. It was mostly caused by the sale of an aircraft. Now, when we start to look at the expenses here, there's a couple of things that really stick out to me. Number one, research and development was down quarter over quarter, or like comparison to last year. And I did read their management discussion and analysis, and they said that it was because of that accident, because they crashed that Condor, and so they have taken some of those resources and put it into the investigation. And they have also stopped some of the development on the Condor until they can figure out what has gone wrong there. And so that was a big red flag, but then I read into it and I kind of understood it a little bit more. One thing that I didn't like though is that the share-based compensation, is up pretty significantly. It was $70,000 in the same quarter last year. Now it's over $220,000. And so that has gone up pretty significantly. But overall, the company has put up a smaller operating loss. I would not call this a path to profitability, but I would call it losing less money. I still don't think they have a very clear and direct route to profitability right now, and so I do have some concerns there. Again, here's the comparison to last quarter's income statement. You can see they put up $575,000 in revenue in that quarter, and a large part of it was because of that sale of the aircraft. Now, when we look at the quarterly results overall, you can see right here, the total assets is just kind of slowly declining, and the revenue, unfortunately, has not being a nice clear hockey stick that we all hoped for as investors. It actually got up to almost $200,000 in last year, and now we're at 175. It's like here and there. It's not consistent. It's not steady. At least they're putting numbers on the board, but I wouldn't say that any of these revenue numbers are impressive in any way for me as an investor. Now, when it comes to the management discussion and analysis, I thought this was an important thing to kind of show. Here they actually talked about the accident and how the revenue was kind of offset. And then they also mentioned here the decrease in revenue is due to the conclusion of the UBC, DSV, and Bell contracts that all concluded subsequent to June 30th, 2022. And then there was one other note on here, right at the bottom here. The EIA contract was operational for the entire quarter ending June 30th, 2023, but had a decrease in pricing on renewal as compared to partially operational during the same period last year. That to me is not a good sign. They had to lower their price in order to continue operating with the Edmonton International Airport for whatever reason. I don't know why, but the price had to come down. And if you have a service that is in such demand and is so good and is so revolutionary, then usually that price goes up and people are willing to pay more after the trial and after the first phase because they see the value in it and you have proved out how valuable it is. But in this case, we're actually going the other way and the pricing is coming down, which is something that I do not like. However, it is not all bad news. They just put out a press release on August 2nd. Drone Delivery Canada completes first Canary drone flights in a commercial setting. And so their new Canary drone, it has a lot of cool features. It's got a lot of cool benefits. It looks like they're making some progress with this product. They're sending out some flights. It looks like they're doing well. I read through the press release. All of the stats on the press release are good. I can't tell you exactly how the operation really went though. Now, when it comes to the flight stats here, this is something I don't like, is that for the last basically 3 quarters here, they've been giving us a variety of different statistics. Sometimes they tell us the distance that they flew. Sometimes they tell us the number of trips they made. In this quarter, they gave us a percentage. It was 17% increase in the number of flights completed. And I really just wish they would simplify this and tell us exactly how many kilometers they traveled and how many flights they took. Because the other thing that I just saw that I didn't notice in the last 2 quarters here was that they included this little line right at the bottom here where they say these results are a combination of flights completed as part of the company's commercial operations as well as development flights. But that changes things because in the first quarter, they told us they did 1,800. Now they're telling us that they did 3,600. So it means that they did another 1,800 in this quarter. So that means, number one, no growth. And then number two, we have no idea what percentage of this 1,800 was them just running development flights in circles compared to actually bringing in customer revenue and servicing their customers. And so I wish they were way clearer on the number of actual revenue generating flights, the number of kilometers they've flown, the number of trips, because this is just making me guess, and it's absolutely terrible as an investor because we're just getting super inconsistent data and I don't like it at all. It's actually just frustrating to try and analyze. The other thing that I don't like is that they have completely removed the budget from their management discussion and analysis. They had it in every quarter leading up to like the last quarter, and then they've just totally removed it for whatever reason. And like I said, the data from the flights is inconsistent. So trying to actually analyze the performance of this company is not straightforward, not simple, and they don't make it easy for us at all. And that's probably why we're seeing a sell-off in the stock chart, especially after this earnings. Stock is down 1.6%. Like, it doesn't have a lot of volume, it doesn't have a lot of attention, and I think we could be headed back down to at least this kind of 28, 29 cents, if not 21 cents, because as cool as the Canary is, I don't think it lives up to the expectations that we all had for this company. Now, here are my final thoughts. Number one, I think they have 1 to 1.5 years of runway left. If they continue on this pace and they don't sell off a bunch of assets, they've got a little bit of time left, but they are going to have to raise money because I don't see any way that this company becomes profitable in the next year to year and a half. I just don't see the path. Maybe I am missing it and maybe somebody has orchestrated and laid out this path, but I don't see it as of right now. Revenue is down, deferred revenue is down, it's basically disappeared, and I don't see any context, I don't see any mention of it, I don't see anybody talking about it, and I'm a little bit worried about it. Also, they brought in $179,000 or $180,000 in revenue. Their personnel expenses in the last quarter were 6 times the revenue that they brought in. Actually, more than 6. It was like 6.7 times the revenue that they brought in last quarter. And so it just feels like they need to go find the low-hanging fruit of whatever drone works and brings in revenue, and they just need to scale that up and figure out how to actually serve a market, because it feels like they're trying to develop 3 or 4 different drones right now for different markets, and it feels like they haven't executed properly on any of them. And you can see that this is evident by the accident that the Condor has just gone through. And so hopefully, if I were Steve, if I were the guys working on this, I would find a way to take whatever is working best, and from my point of view, it's the Canary. I would take the Canary, I would try and hire a sales team to find every possible solution that the Canary can serve, and I would scale that to the moon, and then I would start focusing on the next aircraft, because I don't like the strategy so far. It hasn't worked over the last 3 years as far as I can tell, and I'm a little bit disappointed and frustrated as a shareholder. Now, this is all my opinion. This is all just what I am gathering from public information, and none of this is investment advice, so please take it with a grain of salt. But if you're interested in seeing how I perform this analysis, seeing how I come to these conclusions, and seeing how I actually evaluate these companies, I put all of my information, all of my courses, and all of my content on Skillshare, and it's totally free for the first month. So if you're interested in dividends, options, day trading, or even just long-term investing and getting introduced to the stock market, I've got free courses on Skillshare. Link is in the description down below. Thank you guys for watching this video. Sorry it was kind of negative and sad. I'm like thinking about this at the end here, and I didn't say a whole lot. So let me just retouch here that they did have some huge accomplishments. They are operating in a commercial setting with their Canary. They do have some good things going. It just hasn't lived up to what I thought it would be. So that's it for this video. Thanks for watching, guys, and we'll see you in the next one.